Alright, this is the serial problem for Chapter 1. Looks like we have a small computer services business that's going to do some transactions here. There's 13 of them, and they're already recorded. I'm just going to explain these things. What's most important to remember about this problem is to leave no cells blank and be certain there's a zero wherever required, and the amounts to be deducted for withdrawals and expenses should be indicated with a minus sign, and then you should omit all dollar signs. So our first transaction, we've got S. Ray invested $48,000 cash, a $27,000 computer system, and $12,000 office equipment in the company. So no matter what you invest in a company, whether it's cash or whether it's other equipment, it all goes over here on the asset side. So we have cash is $48,000, and come over here to computer systems, $27,000. And then office equipment is $12,000. You add all those three pieces up to give you a total of the amount he invested, which would be $87,000, and that goes under the equity section under S. Ray Capital. Next, on the third, the company purchased $1,400 of computer supplies on credit. So when you buy supplies on credit, you increase the asset account called supplies. You also increase the liability account called accounts payable. Notice everything else on that line is a zero. Let's go a little further. We now have a subtotal to put in there. They want you to put a balance in, so you just add down the first two lines to come up with these subtotal balances all the way across, and again putting zeros where there's nothing else required. Then on the 6th, the company billed Easy Leasing $5,300 for services performed in installing a new web server. This is why we're in business, is to have customers that we perform services for. So we didn't get any money from this. We did the work and then billed the customer. So that requires us to increase something called accounts receivable, which they're going to pay us eventually, but in the meantime we're going to send them a bill, and when we do that, we'll increase this accounts receivable account by the amount of our work, which was $5,300, and also increase revenues over here, $5,300. Okay, let's go on to the 8th. The company paid $1,400 cash for computer supplies purchased from Harris Office Products on October the 3rd. Back on the 3rd, we bought these supplies and we put them on credit. That is, we charged them. Now we're going to pay for these supplies. So to pay for them on the looks like on the 8th, we're going to reduce our cash account by $1,400, and we're going to also reduce our accounts payable account by $1,400. Remember, both sides have got to go in the same direction. That is, if assets go down, like in this case, $1,400, then something on the other side, liabilities and owner's equity, has got to go down. In this case, it'll be liabilities because it's got to go down $1,400. Then they want us to do another subtotal, and I'm not going to spend any time on that, just to say you got to add these things down or combine them down. Now on the 10th, the company hired Lynn Addy as a part-time assistant for $130 per day as needed, paid weekly. Alright, so you take $130 a day, and you want to, let's see, it looks like just on the 10th. Well, it looks like nothing goes on there because there was not any tell us anything about what's going on with that, so it looks like you don't do anything yet with that. Let's go on now to the 12th. The company billed Easy Leasing another $1,500 for services performed. Again, this is like the first one we had. Let's move this on up a little bit. So that will be on the 15th. We will increase the accounts receivable account $1,500, and we'll also increase revenues in there $1,500. Now let's go on to the 15th. The company received $5,300 cash from Easy Leasing as partial payment towards its account. So you want to increase cash by $5,300. You want to reduce the accounts receivable $5,300. That was usually that was from this first one created up here on the 6th. And since this increased this asset and decreased this asset, overall assets stayed the same. They didn't change. So nothing else has to go across these columns because you didn't change any of the accounting elements. Okay, now that's the 15th. Now let's look at the 17th. The company paid $725 cash to repair computer equipment that was damaged when moving it. So we'll go down to the 17th and we'll reduce our cash account by $725, and then we will also reduce under the expense column $725 because that's an expense that we've incurred and we paid cash for it. Then we go down to the 20th. The company paid $1,693 cash for advertisements published in the local newspaper. So we'll reduce our cash by $1,693, and we'll come across and put that as an expense, which is going to be a minus under this expense column. Next, let's move this down a little bit further. Oops, can't move it down too much further. See, that was the 20th. So let's look at the 22nd. On the 22nd, the company received $1,500 cash from Easy Leasing towards its account. So we will increase cash by $1,500 and we will reduce the accounts receivable by $1,500. And again, that increased one asset and decreased another. Therefore, assets stayed the same. And nothing else needs to be done on the other side of the equation. So we'll just go across there with zeros. And then on the 28th, the company billed IFM company $52.38 for services performed. So that's the 28th. We will increase our accounts receivable by $52.38, and we'll also come across over here under revenues and increase revenues by $52.38. Again, both sides have to go in the same direction, which in this case is up. Next, we've got the company paid $910 cash for Lynn Adley's wages for 7 days of work this month. So finally we get this part-time employee doing some work for us. So we will looks like decrease cash by $910 and then come all the way across over here to the expense side and decrease our expenses decrease under the column of expenses $910. So both sides went in the same direction. And then finally, let's see here, we've got one more transaction I think to go here. That was the 31st. Also on the 31st, S. Ray, who's the owner of this company, withdrew $3,300 cash from the company for personal use. Now we will reduce our cash account by $3,100. I'm sorry, $3,300. So cash goes down $3,300, and we come across over here to the withdrawals account. A lot of people put this down as a mistake under the expenses, but it's not an expense of the business. If it's something that the owner took out of the business for personal reasons, which is what this is, this reduces withdrawals. This transaction is just the opposite of this kind of transaction up here, where we're putting money and other assets into the business, and that increases the capital account. Down here, we're taking something out of the business. In this case, it's cash, $3,300, and that reduces the owner's equity by going under this column withdrawals. Anyway, so you'd want to add all these things down with subtotals, as this problem did, and then come across here and check your answer to make sure that all the assets totaled up to a certain number, which I don't have that number right now, but those total assets should equal on the left what the right side equals over here, taking into consideration that that's a minus, and that the withdrawals are a minus, and that the capital is a plus, and the revenues are a plus, and it looks like our accounts payable is zero because looks like we got rid of that accounts payable back up here earlier. So that's how the problem should be worked. Hope this is helpful.